looking at the market yesterday, even though it ended slightly down, it seems like foreign investors are returning to the market, in particular to the Safaricom and Kenya Airways counters.
That is true, although I think if you look at the performance of the market yesterday, it actually seemed to be a statement more about the resilience of local investors, and they've been missing from our market for a long time. So I'd say yes, if you look over the past 2 to 3 weeks, we have seen quite active foreign participation, but I think yesterday in particular we saw quite a sizable number of local investors entering the market again, and that's a good sign. But yes, overall we seem to be having a general return in terms of activity.
There was also some activity on the equity bank counter. I know that's a favorite for local investors, isn't it?
Yeah, it depends really which local investor you talk to. I think it's a very good company, has historically very good performance, but locally it has at times floundered in terms of being able to give the market confidence. So I think it's half and half, but it certainly is an excellent company in terms of its growth profile. So you will always find whenever the market moves, equity is likely to be a big beneficiary.
Of course, the big mover in volumes yesterday was British American Tobaccos. The bulk of that was institutional investors, and the stock ending 175 Kenyan shillings. How long will we see the stock hold at this level for?
I think the thing about British American Tobacco that distinguishes it really from many other counters, it's a very solid dividend policy. Despite operating in a very tough environment with generally stricter regulation on smoking and those kind of regulations, it has always been a perennially good performer, and it's easy to understand why. So when you have the market being as uncertain as it has been, the very strong dividend you get out of a counter like BAT almost raises it to the profile of the bonds we've seen people take much more interest in. So every so often you will see particularly institutional investors try and take a position in BAT, and now coming towards the end of the year, one can see it as strategically looking to improve their books before they close at the end of the year.
Well, looking at another stock, news yesterday out about East African breweries saying that it's not threatened by the proposed move to legalize the production and consumption of local brews. Why is East African breweries so confident?
First of all, I don't think they're that confident, but it certainly makes good news to say that they are and give the market confidence. I think for a long time they've tried to present the picture that local brews are likely to be a danger rather than a benefit to the market, and really it's from a point of competition. If you look at their history in the market, they haven't done very well with competition, and they haven't often looked to compete. They've looked to eliminate in one way or another, and we have that experience in this market. I think they will be looking to, at least under the table, continue to pass that message that local brews are difficult to vouch for, and that they're able to cater to the market with a range of products from the premium to the discount. So I don't think they are as confident inside as they may sound.
Well, I was in Kenya last week, and I must say I did enjoy drinking some of the local brews like Tusker. But moving on to one of the top story of the day really is, of course, that CFC Stanbic planning to spin off its insurance business with a view to separately list on the NSE by June next year. What does this mean for Liberty South Africa's strategic intent in putting a foothold in East Africa?
I think really what we're seeing here is the pathway between South Africa and Kenya is quite well known, and we've seen very many well-known partnerships take up. I think when you compare, Kenya presents itself as a regional hub and a crucial foothold if you're trying to create an African footprint. So I think Liberty are following a pretty well understood plan in trying to expand in that way. I think what it's more interesting for us locally is to see the ways in which CFC Stanbic Holdings, which is a local entity partnering up with Liberty, how their strategy is changing and whether or not really now South Africa is emerging as a driving force behind their growth in the region. So I think we would wait to see what South Africa says about Liberty, but locally it certainly seems like small is the new big, and CFC Stanbic Holdings itself is now becoming a leaner and more focused operation.
Mm-hmm. Just in terms of giving our viewers a sense of what this means for the insurance market, it is 880 million shillings that's taking place in this deal. How big is this relative to the sector? I
think really this place, we do have a few larger players. It is interesting that at this point in time, there was likely to be a wave of mergers and perhaps acquisitions in the industry because of separate legislation that now speaks to the ownership thresholds within the industry. So certainly, I think once all the dust settles and once the smaller parties decide whether they will sell out, merge, or be acquired by larger parties, you will find that the new entity being proposed would certainly be one of the key players in the market.
Of course, looking at what this means for CFC Stanbic, as you mentioned, it is streamlining the two businesses, banking and insurance business. But what are investors thinking that this means, particularly for the CFC Stanbic banking business?
I think really it's a bit of a case of two steps forward, one step back, because the message that was coming out of that particular institution about a year earlier was consolidation under the bank assurance model. So I think we're seeing with this as a departure from that particular strategy, which is to be expected because you've had an injection of new insight in terms of the new ownership that came when the partnership took place between CFC Bank, which was a local entity, and Standard Bank South Africa through Stanbic in Kenya. So I think we are seeing a change in direction. And I think it's a bit disorienting for the market because it's then difficult to understand where the company as a whole is going. So you might see the counter go quite quiet until the market can understand where it's going and then pick up again when the partnership is solidified.
Moving over to the bond market, I just wanted to get your view. Yesterday, the announcement that the second tier of government's infrastructure bond was oversubscribed by 239%. In terms of, I mean, that's quite a big increase from its first tier, which was only which was 145% oversubscribed. What's the market doing right now, and what impact is this having on the shilling?
That is quite big news, to be honest, because 3 times oversubscribed for a market that's supposed to be still reeling under the pressures of economic downturn is an interesting figure to try and digest. I think, first of all, it seems to say the government might have got it wrong because then they should have come to the market for a larger amount. We certainly know that they are looking for large amounts of capital for infrastructure development, and they might rue the fact that they've only come for really 50% of current market capacity. Broadly, what it seems to say is that there is a lot of capital in the economy that's really looking for a home. And that would really be a boon to the stock exchange, the capital markets in general, because it really seems once we settle down, once confidence issues are addressed, there is capacity to grow this market. But it's certainly a very key indicator. It may take a while longer to have an effect on the exchange rate because, look, this is all local. They may be considering a foreign bond later on. But I think for the moment, really what it does say is that there's a lot of capacity, a lot of capital floating around in the economy, which ultimately is a good thing.